Hi guys, welcome back to my channel. Kelvin here. There are tons of cryptos that you can invest in. Some of them will make you what big, but others will make you go to Holland. One of the most famous examples is the Squid Game crypto.
And now the market, it went to zero!
And it's becoming harder to trust cryptos nowadays, especially when influencers and even news articles are promoting fake cryptos every other day. In fact, Rugpull has become very popular in 2021, with a total of $2.8 billion were lost to it. So in this video, I will show you 7 ways on how to identify whether a crypto is a Rugpull or not, so that you can avoid losing their hard-earned money. But before I start, I would greatly appreciate it if you can help to tap the like button. In return, I will show you a happy fox. Alright, let's start right now. So maybe you are new to crypto and be like, what is Rugpull? Can eat one na? Rugpull is basically when developers take investors' money and run away into the sunset. There are 3 ways this can happen. The first one is called removing liquidity. Okay, the name sounds very cheap, but it's actually quite easy to understand. In crypto, there's something called liquidity pool. And no, it's not your condo swimming pool kind of pool. In liquidity pool, we have 2 cryptos. For example, BTC, ETH. The more BTC, ETH you have in this pool, the more liquidity it will have. And with this BTC, ETH pair, investors can easily convert between BTC and ETH. If this pair doesn't exist, then you cannot convert between these 2 cryptos. For example, this is a list of liquidity pools in Uniswap. If you look at this pair, you can convert USDC to ETH, ETH to USDC. The total value of cryptos in this pool is about $428 million. So the liquidity is very high. Here's what happened in a Rugpull. The developers create a new crypto. By the way, it's super easy to create a new crypto. Everyone can do it. Even your ama can do it. Let's give it a cool name like Squid Game Flocky. Oh, the crypto exists. Like I said, anyone can create a crypto. Then the developers pair the popular crypto like ETH to this Squid Game Flocky to create the Squid Game Flocky ETH pair. When people want to buy this crypto, they will use ETH to buy the Squid Game Flocky. Then, when more and more people buy Squid Game Flocky, the crypto will go to the moon. When the time is right, the developers will withdraw all the Squid Game Flocky ETH liquidity. And because of how liquidity pool works, they will end up with more ETH and very little Squid Game Flocky. And because there's no more liquidity left, investors won't be able to trade anymore, and they are left with a worthless crypto. So that's removing liquidity. The second Rugpull method is quite simple. Developers disable the ability to sell cryptos. This means that investors can buy the cryptos, but they cannot sell it. Basically, they are forcing you to have diamond hands, which is not a good thing in this case. So when more and more people buy into the crypto, it can only go up. And again, when the time is right, the developers can just sell the cryptos and run away with the money. This was what happened in the Squid Game crypto, where investors lost $3.3 million. Finally, the third Rugpull method is also very simple. Developers sell the shares. For example, they could create a worthless crypto, maybe call it Neko Inu. Oh wait, the crypto exists too, and it's gone. Turns out their project was a scam. Anyway, in this method, developers tell everyone that this crypto will be the next thing. They be like, this crypto will be the next Bitcoin killer. If you buy now, you will what big. And after you bought, they will slowly sell the shares and run away. Again, leaving you with some worthless crypto. So that was a few ways Rugpulls can happen. And the sad thing is, when people see so many of these scams happening, they will think that all cryptos are scams. They'll be like, Bitcoin is a scam. You will lose money if you invest in cryptos. But here's the thing, not all cryptos are scams. They will be useful as long as they serve a purpose. For example, Ethereum is used to make play-to-earn games, decentralized exchange, NFTs, and others. Bitcoin is used as a store of value, but obviously, it's not easy to tell good cryptos from the bad ones. For example, people bought Squid Game crypto because they thought it's a new play-to-earn game, or people played Neko Inu because it lets you earn high returns. But that ends today because I will give you 7 easy ways to find out whether crypto is a scam or not. The first one is quite simple, don't buy dumb shit. You will always see influencers promoting cryptos. For example, if you search for SafeMoon, you will see a few hundred results. Here's the thing, crypto developers pay influencers to talk about cryptos all the time. For example, this guy approached me to promote Crypto Island, where the goal is to buy an island in the Bahamas together with you. If it sounds stupid, yes, that's because it's really stupid. If you look at the chart now, it has gone down. And I also get these emails all the time. Like this guy wants me to promote Real Water, which will unite all cryptocurrencies, blah blah blah. or this crypto golem. And influencers can earn a lot of money just by talking about the crypto. For example, Kim Kardashian, someone who knows nothing about crypto, was talking about Ethereum Max, and it was found out that Kardashian West could easily earn 300k to 500k for an Instagram post. So yeah, don't listen to influencers, don't buy dumb shit, and you'll be alright. Second, look at the website. Crypto projects will usually have a website. If it is a bad website, it is most likely a scam. Like the Rugwater that I mentioned just now, it looks super bad. Or this other Squid Game crypto website. Yes, there are lots of those scammy websites out there. Or even that Neko Inu game. The reason I got suspicious in the first place was because how bad the website looked. Even my intern can code a better website than them all. Other than website quality, you can also check when the domain name is created and when will it expire. You can go to a website called Whois to find the info. For example, Neko Inu domain was just renewed on October 2021 and will expire after 1 year. Or the Rugwater website only has 1 year before it expires. If the period is so short, what will happen after the website expires? I don't know, maybe they will Rugpull? Third, find out who are the developers, because if they are well known, the chances that they will try to scam you is much lower. For example, we all know that Ethereum was created by Vitalik Buterin and his team. Solana was created by Anatoly Yakovenko. On the other hand, if you look at this Apes token, the team is just two monkeys. One is a super blockchain coder, another is a data science whiz. We don't know who they are, what's their real name, where they live. Nothing. Or these crypto bike riders, where the team is just using some 3D images. If you try to search for these people, they don't exist. Probably they are real, probably they are just scam. We don't know. All I know is that if there's some weird uncle asking me to give $1,000 to him, I certainly wouldn't give him. Same for cryptos. If I don't even know who are the developers, I ain't gonna invest in their cryptos. Fourth, whitepaper. Whitepaper is basically a documentation of how the crypto will work. For example, this is Bitcoin's whitepaper. It tells you exactly how Bitcoin works, the proof of work system, incentive for mining, and so on. Or if you check Terra's whitepaper, it tells you everything that you need to know. What is it, how to run a node, how to contribute, etc. That's how a good whitepaper should look like. Meanwhile, if you look at some weird crypto like Maui Inu, if you check the whitepaper, it tells you some random stuff like endurability, fast adoption, aiming for the stars, and all kinds of crap. It doesn't tell you how the crypto works, what's its real utility, what's the tokenomics, who's the team behind it. Nothing. What about this nanometer Bitcoin? The white paper looks like it's written by a primary school kid, and it's just 11 pages long of stuff that doesn't say anything at all. So by checking the white paper, you will roughly know what the developer is capable of. But what if the website looks good, the domain name has a very long expiry date, white paper looks legit, then it means the crypto is legit? Well, yes, but no. If the scammers are rich enough, they can do everything nice for you. For example, this is Shelter Crypto, where if you invest in it, you can be part of improving the future of our world. And the website looks very good too. So this is where you can use the next tool, Token Sniffer. They will show you something called smell test, basically how smelly the crypto is. And in this case, it's got 20 upon 100, which has a high risk of being a scam. You can see that it has failed a lot of checks, like there's a lot of similar token contracts. If you scroll down, it found like 151 similar cryptos, like Safe Sun, Golden Kitty Cake, which was flagged as a bug, hack, or scam. If you check the difference, it's basically some minor change. We named Shelter to Golden Kitty, changed some parameters, and that's it. Besides that, it has also failed a lot of tests, lots of tokens burned, the owner owns a lot of the crypto, and there's low liquidity. But of course, this tool is not 100% foolproof, because if I copy-paste the Ethereum address in, it also thinks Ethereum is smelly. There's a lot of similar token contracts, some of it are even scams. So in the next check, you can look at the top holders, because if there's any majority holder for the crypto, they can easily dump the cryptos and Rugpull you guys. If you check this Ninja Flocky, then under the holders tab, you will see that the top 100 holders own 95% of the crypto. And that's very bad, because you basically have to pray that the top 100 holders don't sell. If they sell, then the crypto will crash and you will GG. Lastly, you can also check the liquidity. Like I mentioned just now, Rugpull happens when developers withdraw their liquidity. And usually, Rugpull projects have very low liquidity. For example, if you go to Dex Guru, you can see that Ninja Flocky has only 15k liquidity. Meanwhile, legit projects like Ethereum has like 5.09 billion liquidity, which is super duper high. Also, make sure that the liquidity is locked. You can use the Token Sniffer website that I'll show you just now. this Shiba Inu finance liquidity will be unlocked very soon. Same for this true burn, the liquidity will be unlocked very soon. So that was liquidity. The longer the crypto is locked, the more liquidity it has, the lesser chance a rug pull will happen. So those were a few ways that you can check whether a crypto is a scam or not. If anything, just fall back to the first rule. Don't buy dumb shit and you'll be alright. Anyway, that's all for today. Hopefully with this video, you will know how to avoid rug pulls. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.